All right. Okay, so let's get started. Today I picked a DSCR topic because we hear about it, but we don't know much about it. So the DSCR loans are your debt service cover ratio programs, also known as easy loans. So we'll be talking about these, and we're going to go through each PowerPoint presentation, each slide a little bit slower, only because I feel like this is a program that a lot of people would have questions and may have a particular scenario that I can help answer during this process. Okay. So we're going to get started. Give me 1 second. For some reason, I'm echoing on the, okay. Can you guys hear me okay? Just give me some thumbs up so I can proceed. Yes? All right. All right, let's get started. If you are new to our workshops, my name is Luz Yuncor. I'm the branch manager in New World Mortgage here in the city of Downey. I have been serving the East Los Angeles and Orange County communities for just about 23 years this year. And it's been an amazing and wonderful career. And I get to share with consumers and realtor partners a lot of great information. So it reaches out to more people and we're able to make financing possible for many households. So today, like I mentioned earlier, our topic, if you're just tuning in, our topic is about DSCR loans, aka easy loans, which are our debt service coverage ratios type of loan. We'll talk a little bit about, the inside of these programs, who is the program great for, who's eligible for the product, and we'll also run some scenarios just so you can see as an example if it's a good fit for you or your client to be able to go into this program. And please feel free to, I know we tested the chat, so it is working. So feel free to just drop any notes, any scenarios that you may have as we go through the presentation. So thank you once again. We're gonna try to get through the slides in the next 35 minutes. So I promise it will be all worth it. It's the best 35 minutes you've got out of your day. I promise you'll get something to take and teach someone about this amazing product. So let's get started. DSCR loans, they're great programs and they are designed for real estate investors. So keep that in mind. It is for real estate investment. It's not for someone that it's planning to occupy their home. Okay, investment properties means anyone that already has owned an existing property and wants to purchase their second home, because we do require a history of being able to be an actual owner of a property. Okay, you could be a multiple owner. You can actually, we can lend up to 10 DSCR loans, which is great. So we can finance 9 of them all together if we need to, all at once, and we'll kind of top into that topics pretty soon. They are interest loan options with these programs. And the main highlights, which is a big question, is how much can I finance? And these guidelines just pertain to our company, American Pacific. So it's, there might be banks, full disclosure, that can lend more. They have different guidelines, that have different options for you to finance. And these are the programs that we lend here at our company that's going to be able to facilitate the product for you. Okay. Another big note is that we don't broker out our loans, which is really important. These loans are serviced and they're underwritten by our department. So that means we have full control of the underwriting, which is in a lot of situations where you want to be, because you want to make sure that the loan officer works with the underwriter in case there's overlays on some of these guidelines. So we truly underwrite these loans. We have full control of them. We draw docs and we fund them in-house, so they are not brokered out to a third-party bank. Okay. Okay, important information to know about DSCR loans. So now that we've gone through what is a debt service cover ratio loan looks like, who can be eligible for the type of loan, I want to share with you guys some stats, because I love sharing stats, right? What would we do without a world of statistics? We always want to know where the market's going, what's trending, who can use these loans, and are these loans used all the time, and how maybe perhaps the first time you heard about this type of loan or never used a DSCR loan before. So according to CISA.com, there's about 43 million investment properties in the US, and that's only growing as investment opportunities come with the gap on affordable housing, right? Housing becomes a challenge for first-time buyers. And as we know, the investors pick up the properties that people can't buy, right? Especially the properties that need work. So there's a lot of opportunity if you're an investor or a realtor working with an investor, you yourself wants to invest in a property. These are the great programs that it's available for you. Most popular loans when investors think about buying a property and what we call having an easy process, an easy transaction, they typically turn to a hard money lender. We do work with some hard money lenders that we refer our business to. We don't do any hard money loans here at our company, but hard money loans are very different than DSCR loans. And the way they differ is by the cost. And that's a really big thing that investors need to know. Unlike hard money loans, we are not charging points for the loan, and the interest rate is more attractive on a DSCR loan than a hard money loan. So depending, again, some hard money loans are, great, they're quoted with an amazing rate. Maybe they're not, again, we're not, competing against these type of loans. We're just being another resource and another outlet for a different type of product. So, but the truth is that a lot of investors are using hard money loans for a quick turn time, for a, quick and easy transaction. And, again, DSCR loans are not going to be any different than a hard money loan. They're going to be more beneficial for you because they're going to be cheaper on the rate and the cost of doing business. So if you're an investor that's looking into saving every dime you can in a transaction, I highly encourage you to look into this type of loan first before you go into a hard money transaction. So here's this is a little bit about a year ago data, about a month, let's say. Not much has happened since August till now. It's what I want to say. We kind of skipped mid-year 2022 because of our market conditions. But multifamily investment, it's growing among investors, right? They are in the market. If you look at the graph, gradually investors are actually, gearing up to investing more and more of their money into real estate. Perhaps, you have someone that thought about investing their money into a property that they saw, however, they don't qualify for a loan. That's always the big question. Or they don't have enough reserves. They don't have enough income. They have the money. They don't know the resources that's available for them to be able to invest. With the DSCR loan, it's going to be the solution. So multifamily investment, it's growing, right? And if you guys have gone into an SB9 workshop, you guys know that with the SB9, people are investing. It's encouraged to build multi-unit property. So, layering with the DSCR loan, it's perfect, right? It is going to be the up and coming, we're seeing ADUs being built, duplex being built, housing on top of another. So this is just a chart to show you that, yes, the investment opportunity is starting to grow again among investors. So keep that in mind next time you talk to someone that's interested in investing, and share this chart with them to give them some confidence that investing in real estate is still a great time and a great buy. So let's dive in onto who qualifies for a DSCR loan. Borrowers can qualify as a non-owner occupied property. So keep that in mind. If you're a first-time buyer, this is not the loan for you. This is strictly for an investor owned property, someone that wants to invest in the property, okay? It can be a second home as well. Anything that's a non-owner occupied, okay, that it's primarily designated as a business. So someone that wants to invest on a duplex, a condo, a townhome, that wants to have a rental cash flow, this is when we're going to be using the DSCR loans. It is eligible up to 4 units. Okay, so that's great. And it's also, the loan to value can go up to 80%. Some banks only go up to 65, some 75, right? And when we meet up to 80%, there's always, the threshold on reducing the loan to value depending on the credit score, the type of home, if it's units, right? So those are the adjustments that we're going to have that would not allow you to finance up to the 80% loan to value. So just keep that in mind, please. I'll go ahead and answer that question just a minute when I'm done with the bullet points. And another big win for this is a lot of my investors are always calling me and they want to buy properties, but they don't want to do it. They want to make sure that the title gets transferred to their corporation and the LLC. And in some traditional loans, that is not allowed. When this particular transaction, you are allowed to take title under an LLC or a corporation from the beginning. Okay, so that's another huge advantage for my investors, that you can actually close a transaction under your corporation. We also lend up to $2 million in our DSCR loans. That's a pretty good cushion. I think in California and Los Angeles area, $2 million can get you a nice slice of units as well. And these are non-conforming loans. These are non-QM products, so they're not going to go with the traditional financing. The LTV are based on your single family, your PUDs, your townhomes, right? And also and if it's a fixed term loan or if it's an interest only loan, which I'll explain to you guys a little bit about the different types of products, that the terms of loans that we can offer with the DSCR. So it's going to vary. So every scenario is different. It can be used for a purchase or a refinance. So that's great event. So if you want to refinance a property to cash out, to liquidate, to buy another property, we can use the DSCR loans on both scenarios. We can help you cash out of your home to purchase another property by using the DSCR loans, okay? 660, it's the minimum credit score. So keep that in mind. That doesn't mean 660 can get you up to 80%, but it's the minimum credit score that is required for the DSCR loan. And in some examples, the 660 credit score can go up to 65% LTV in some scenarios. And there's a true no borrower income, no employment information required. Our application is completely blank. We do not require to get any information on your employment, any information on your taxes or W-2s. Okay. So we will, from case to case, require a business license if that's something that we see on the credit score is low or we don't see the business, but there's nothing else that's needed on the application. And we do have interest only option as well. We want to make sure that our calculations are done on a fully amortized loan, but we're always careful making sure that you're maximizing your cash flow on each property. And it's a cash out solution for future investments. I mentioned that earlier. I think it's a great way to liquidate some of your funds from your existing property and then dump them into a new investment. So that's something you want to look into, making sure that it does work for you as well. All right, so I'm going to get to the question. You can't see the slides. Okay, so no one's able to see any slides. Let me go back and see if this one's able to be shown. If you're listening, that's great. You couldn't see them. All right, let me see what's going on here. Give me 1 second. Let's see if we can get these lights going back in here. I think sometimes with the Facebook Live, it just kind of Can you guys see any slides now? Let's see. How about now? Can you guys see the slides? How about now? Can you guys look at it now? Can you guys see the recording now? Okay, awesome. It must have been something with the Facebook Live. Sometimes Zoom and Facebook crash. So I know it's good to know not to do that anymore. So, all right. So let's go back to where we left off on the who qualifies for the DSCR loans. We'll kind of go into the next slide. I'm sorry you guys couldn't see them, but I'm going to share these slides with everyone, and I promise the recording it's going to be a good one. Or re-record it just for everyone, just to make sure we don't have any interruptions. Okay, so now my slides don't work. Let's see. Okay, hold on a second. Give me 1 second. Well, it doesn't look like Zoom is well. Okay, I think we got it. We got it. All right, let's see if this works now. All right, I think finally I had to go back out and come back in. Okay. So we kind of, excuse me for that, we can't, sometimes technology works in our favor, sometimes it really doesn't. So just kind of what we talked a little bit about, we missed the slides. It's about multifamily investment growth to continue. So we kind of discussed that, who qualifies for a DSCR loan. Some of the requirements, right, that it's needs for investors. So, we talked about, the type of loan that DSCR has. Let's talk a little bit about some of the requirements to be eligible for the DSCR loan. So the DSCR loan, we can lend for condominiums through your investor that it's required that would like to invest into a condominium. If we could finance non-warrantable condos up to 75% of their loan to value. We can do SFRs, PUDs, townhomes, 2 to 4 units, and condominiums. So, it's a broad type of property. So that's phenomenal. Know that you are required to have reserves. So you are required to have 6 months of principal and interest and taxes and insurance in your bank account for any type of investment. The way the income can be used to qualify you for a DSCR loan, because it's strictly based on the rental cash flow of the property. We can use the rental based on a current lease agreement or a 1007 appraisal valuation on that rent. And we'll kind of share with you where we're getting the rents from the appraisal. So you want to make sure that we have either one, and then we will take an existing lease, and the higher leased amount of them will be shown. And if the lease, it's actually more than the rental survey, we need 3 months of receipts to show that your tenant or the tenant at the existing property has paid that amount of rent to the existing landlord to consider the rent and avoid using the 1007 form. Okay, so there are other options if the appraisal does not provide a good appraisal rental survey for us. It is, first time investor is allowed. The investor is required to have a history of being an investor in the past by, their current mortgage, but a lot of the investors that we see buying into DSCR loan have multiple properties, have already owned real estate. So this is not their first time around buying an investment property. But we do require us for them to be a second time investor with a history of being a landlord. Okay, 2% seller concession is allowed as well. So if you have a seller giving your investor credit towards closing costs, 2% it's the maximum, and that's just not on DSCR loans, but it's all type of loans. 2% it's the maximums a seller can contribute on any type of investment loan product. So whether it's a DSCR loan or traditional financing, 2% is the max of your concession. Any questions on anything so far that we've covered? All right, I had promised everyone's going to be 30 minutes, and with the 7-minute interruption of the internet, we are running a little bit behind. So I promise to give you enough info. If there's anything else that you guys want to add on to that, please feel free to call me or text. So these are the products that are great for DSCR loans, right? So this is another thing to investors look for short-term investments. At times they want to cash flow as much as they can from their property in the first 5-7 years. A lot of investors are only looking to invest in a short-term period, not on a long term. Or if you are interested in a long term, we have 30-year fixed loans available, and we have 30-year fixed IOs also available for you. But investors are also very attractive to our 5-year 6 arms or interest only 5 years as well, because they know they're going in there. They already analyzed that this property is going to be giving them a great cash flow for the first 5 years. And afterwards, they either sell, they refinance, and they upgrade to a much larger investment, or they upgrade to multi-units. And sometimes this is just the stepping stone for an investor to get into a house, like a single family, resell in the 5 years and do a 1031 exchange, which is a whole different other webinar. And you can actually exchange your property and upgrade to apartment buildings, 5 to 10 multi-units. And then you start seeing the cash flow even bigger. And that was more commercial side when you own more than 5 to 10 units. But this is just that stepping stone that the investors need to be able to access to larger investment. So a lot of times, people ask, how do they do it? How do they own a home? And now they have 20 units. How do they get access to money? Well, they're working with realtor partners and lenders that have these options for them, that these particular programs are designed for them. And we make it really easy for investors to get access to money. And this is one of many products that's available for an investor. And this is the quickest and easiest way to get money. So keep that in mind. You do have options on products, whether it's a 5 years, 30 years, full amortized loans or interest only type of transactions. And then we can sit down with you and analyze what is the best choice for you, what's going to fit your need as an investor. So Dscr loans calculation. So we are looking into making sure that it cash flows. Okay. We talked about what we use for cash flow purposes. We use, the current lease agreements, or we use the 1007 from the appraisal. Can this product be used for a flip? So a flip home, which is a rehab for reinvestment to resell, it's not designed for a DSCR loan. This is for retaining. There's a 12-month requirement to be in this loan, just like a hard money loan. A lot of hard money loans, you have to repay back high interest penalties and everything else that goes along with it. It's kind of the same thing. If the loan it's paid off early, that's not the intention of the DSCR loans. Okay, so let me see. So the debt service cover ratio, we look at, like I said, the gross rent from the 1007 or the 216 form to make sure that there's sufficient cash flow to debt service our monthly payment. So we're making sure that there's enough cash flow. We have our own income calculations that we look at every single particular property. And of course, this makes sense, right? As an investor, you want to make sure it cash flows. So if the bank is looking out for your best of interest by doing these calculations to make sure it gives you a cushion in case you have a vacancy factor in that property. So, we will look at each property, and sometimes the appraisals don't match what the property is actually rented for. And this is why we will accept the 3 months lease agreement with proof that the tenants are paying that high rent versus an appraisal survey. Go with the next slide, if it allows us to. So this is what the appraisal with rent schedule looks like. We ordered it, it comes in through the appraisal. So the appraisal will give us comparable rents. And sometimes the appraisers, we work with appraisals are local to our neighborhood. So we want to make sure they understand that from one corner, jumping over the other side of the freeway can be the same city and it can be within a mile radius, but the rents can be very different just because you're in one side of the block versus the other. So we want to pay close attention to our rental survey, because this can actually be a dead killer, like for a transaction. This can kill our deal if the rents don't come in. So when we look at comps, we want to make sure that we run our own comps before the appraiser goes out there, that we're assured that there's going to be absolutely no chance that this appraisal survey is going to come back wrong. Okay. So we're going to do our homework. We're going to help you, teaming up with the right realtor partner. It's also going to be really important for the consumer to make sure that they understand the neighborhoods and they understand what rents are doing like in the area. And in LA, all the rents keep going up, but there are some pockets that are rent controlled. So we have to be careful with what the rental survey tells us. Dscr are ease of use. So just remember that there's no income documents required. The ratio is all based on the rental property, on the rents of the property. You only need a schedule of real estate if you own multiple properties that pop up on the credit. We want to make sure that we know that they're listed and we're aware of them. We don't need mortgage ratings for anything. So we get rid of all the credit supplements, all the additional stuff that's needed. There's no need to verify, taxes, insurance on any of the properties. We just, look at them. We have a rental schedule. We just want to list all the properties that you own to make sure that we don't miss anything. And we can also close on multiple loans as an investor. So we can have 3 or 4 transactions open and close them all at the same time, as long as the debt to income ratio works and that each property services on its own. So, DSCR also works for refinance. So just keep that in mind. You can do a rate and term, so you can get out of a hard money loan into a DSCR loan. It is used for a cash out on the subject property. Okay, cash out transactions. We missed the off the market on this slide. On cash out transaction, if the property was listed in the last 6 months, it gets a 10% LTV reduction. So we won't be able to land up to, let's say, a traditional 70, only 60% of the value if the property was listed. So that's something good to know. The property value will also be lesser of the recent listed price. So what that means, if the property was listed for $550 and the value comes in at $590, we're going to use the $550 listed price, because that's an indicator to us that you already told us that the market was under the asking value. It's tricky. I know we don't like this rule, but we will take the lesser of. And typically that's never a problem because we have enough equity on a lot of these properties. And keep that in mind, it's investment property only, and we do require reserves for the refinance. For the refinance cash out, if you're cashing out, we can use the cash out from the refinance as part of your reserves. So that's a big plus. Here's a scenario on how DTIs work for new properties. So this is just kind of, we get a lot of scenarios every single day. And the big question is, can we borrow money against this property? Can we buy this property? Can we move money from here? Can we, move things around? And one of my clients, this is, just kind of to give an idea what a scenario we run into, is that they wanted to buy a more expensive home than what they currently have on their existing properties. And their properties were all of them free and clear, most of them. Okay. And obviously a $1.2 million property, even with the $300 down payment, the debt to income ratios for that cash flow, it's not going to work in some of these areas. So what we did is that we were able to give him cash from the other properties that were free and clear, which were at that point, paying cheaper interest in a hard money loan. And he was able to use that cash to pay for this property, all cash, so that he cash flows a lot better, right? And there's no doubt that he's going to cash flow on a property that it's free and clear, right? So there's a lot of scenarios. Every single investor has a very particular scenario to run with us, a different type of property, different type of down payment, different type of home and area. So just make sure you check in with us and let us know how we could help you run these numbers to see if it benefits you to buy this type of property. If you want to apply with us, here's our mobile app. We're also on our website. Really simple. It's just your application, your information. We check credit, and you don't need to upload any documents. It's that simple. You just tell us how much you want to borrow, how much money you have, and we will check your credit and issue a pre-approval letter on a property that we're estimating to have a cash flow with a DSCR loan. So there's really nothing to them. The only thing that we have to watch out for as we look through this product is the occupancy, the terms, whether it's a type of property that's financeable, and making sure that every property cash flows with their calculations. Besides that, it's pretty simple, just some basic guidelines that you can share with your clients. If you're a consumer, basic information that you need to know that you could share with friends and family that perhaps were interested in obtaining an investment in the future, and they're worried about their income is not being enough, that their business is not cash flowing as it used to be, their taxes don't show all the income as business owner. This is the perfect loan for you. Okay, so if you guys have any questions, please feel free to reach out to me. If there's no additional questions, thank you guys for coming, and thank you for hanging in with me even during this technology here that keeps on messing up on me. I know not to go Facebook Live anymore. Thank you for attending, and please do watch out for our next workshops. We're going to have one next Thursday, and I actually have a special guest, Courtney Richards from CASE. He works with multiple investors in the LA area and focuses a lot on finding properties that have opportunities for ADU. So we're going to hear from him. What are some of those opportunities he sees, and where he sees those properties going, and some great benefits of why you should obtain a single family with an ADU. All right. Thank you everyone for attending, and we hope that you sign up for our next workshop. And please, read your newsletters that we send out. There's a lot of great valuable information for you. Thank you once again. Bye-bye. I'm done. Don't stand there and wait.